And as we mentioned, I think it was Tim, housing starts did come in better than expected in July. But Zillow senior economist isn't betting on new construction rebound just yet. Orphe Divounguy is behind the call. He joins us now. Thank you so much for being here with us. I understand you look at this, of course, from an economic viewpoint rather than a stock perspective. But when you're looking at the housing market in general, what are you seeing? Are you seeing homeowners really waiting because they're hoping that rates pull down in a way that gets them to move off the reluctance that they've felt so far?
Look, affordability is still the main issue in housing today. Across the board, we're seeing affordability improving somewhat. In places where builders have built a lot of housing, but this is still a problem. And so, in places where you see a big increase in inventory, you're seeing a builder pullback. You saw the numbers this morning. Permits are lower than fell for the first half of this year. They're lower than they were a year ago, and so that doesn't point to a lot of supply in the months ahead.
Orphe, I think the average number of homes in terms of inventory, new homes in this country, is about little less than 6 months. As of June, I think it's up almost to 10 months, the highest number we've seen since 2008. Now you're hearing the home builders' average selling prices have been coming down. I mean, that doesn't sound, as much as people want to talk about this robust housing market, it sounds like anything but to me. Thoughts on that?
Yeah, let me start with the bad news since you went there. Look, uncertainty, I think, is the problem, right? It caused private sector job growth to reach what we call stall speed. People don't go out buying a new house when they're not getting a raise and inflation's eating at their paycheck. They don't buy a house or a new car when they're kind of uncertain about their job prospects. And so that frozen labor market hasn't helped residential mobility. We know from the data that the number one reason people move is first and foremost a job. We're seeing that softness also play out in the rental market. Now, here's the good news. Mortgage rates have been on the decline since May. And historically, we know the Fed has put more weight on the labor market side of the mandate. And so we may see some support. I think ultimately a strong economy is how we see more activity in the housing market.
Orphe, it's Tim. So let me go a little deeper on that and really play into your economist hat. So rates could be coming lower. We've just talked about how rates are going higher. Talk about history and where the housing market has been at a time when rates aren't terribly low relative to their recent history. Even if the short end is dropping, we know that doesn't mean mortgage rates get better. Just thoughts on the industry relative to this type of an interest rate environment.
Yeah, I mean, look, ultimately, the changes in interest rates or in mortgage rates matter, but other things matter too, right? And so, ultimately, the Fed rate cut is not really what's going to move the needle, I think, for mortgage rates. They're somewhat already baked in to today's rate, so I don't expect mortgage rates to decline very much. I think what has hindered the housing market this year is really the dwindling labor market prospects, the uncertainty that we saw in the spring, and this is kind of slowly resolving itself. And I think, rate cuts are going to kind of help, hopefully. We had that labor market report that kind of just confirmed, one thing I had been talking about for months, even before the number of revisions, was the slowing down of the labor market, right? And that's showed up big time in the housing market this year. Mortgage rates, I think people are getting accustomed to the current level of mortgage rates. If you look at the behavior of sellers are basically back to kind of their typical behavior. They came back in the spring, and now we're starting to see a decline in new listings on Zillow. And so that decline in new listings, coupled with the pullback from builders, is going to provide some support for prices, for home values. And unfortunately, it means that buyers in this current moment who have more options than they've had in a long time, and more price cuts than they've had in a long time, well, that might not stick around very long, right? If you start to see a pullback in supply, right? Last month, we had 27% of listings on Zillow had a price cut, right? If you start to see a pullback in supply, those conditions, that softness could get away from them.